Hey folks, we have been heavy on the banking sector this season for the reason, of course, that it's been the earnings cycle for F25 numbers, and we want to close this conversation with possibly the biggest turnaround story we have seen in the industry, and that is from SBM Bank Kenya. That is the State Bank of Mauritius, Kenya, of course, and we're privileged to have the man in charge, Mr. Bhartesh. Shah. Karibu sana.
Asante sana, glad to be here.
Thank you for being here, my friend.
Excellent.
Maybe let's just start with some context setting. Of course, we saw your appointment not too far back. Here we are having a conversation about SBM Kenya and its performance. Give us some color about the bank, about yourself, and how you are steering this ship.
Sure. So SBM Bank, as you mentioned, is State Bank of Mauritius. We're 100% owned by SBM Holdings, which is listed on the Mauritian Stock Exchange, and our single biggest investor is the government of Mauritius. We've been here since 2017, but a lot of people don't know who SBM is, who's behind it. It's actually the largest shareholder is the government of Mauritius on that. And on the personal side, Kenyan, I've been unfortunately in the banking industry for nearly 30 years now.
Unfortunately.
Oh, you know, when you tell people you're a banker for 30 years, they look at you in a very funny way, right? But yeah, I've had the pleasure of working across the globe, obviously largely in Kenya, but I've worked in the UK, Botswana, Singapore, various roles in corporate, in retail, in products, in risk, and now I'm here, joined SBM nearly 2 years ago.
Wonderful, and clearly you are turning around the business, and the latest FY25 numbers have been quite a stellar point there. Help us understand and characterize the operating environment for F25, your key revenue engines. A number of players in the industry took a hit on their funded side of the business. How did you steer that business?
Sure. Let me start with the context on this. You know, I joined nearly in 2 years ago in 2024 May, right? And my mandate was to turn around the bank. Now, in full year 2024, we made a loss of 1.6 billion shillings. When I joined, we were making a monthly loss of 300 million shillings, right? So we had to look at the fundamentals. And a lot of time was spent on fixing the fundamentals. We spent a lot of effort and money on the systems as well. We've changed our whole systems, our networks, our servers. We've gone into 2 new data centers. We've got the stability. And then we went out to the customers on that. We rejigged our workforce as well. We rejigged our product set as well. So that was the beginning of the transformation. And the full year 25 numbers is starting to show the early results of this. And I still say we're in the early stages of this. I think we've fixed the fundamentals. Now we're in a growth phase on that. What we saw in 25 at a headline level is that our profit, you know, from a loss of 1.6 billion in 24, we went to a profit of 614 million in 25, right? And this was a broad-based growth. Key driver to this was the growth in our deposits. I mean, our deposits grew by 20%, but 98% of that growth came in the transactional accounts, the current and savings accounts, CASA as it's called as well. And that's on the back of stable systems, more customers, more transactions, and our investments into digital capabilities as well on that. So that really drove the deposit franchise as well. Our lending side didn't grow that much, only by 4%. So the surplus we parked into government paper on that. So when you look at our deposit cost or our cost of funding, that actually came down 20%.
Thanks to the CASA.
Yeah, thanks to CASA. But our interest income actually grew by 1%, again, because of parking into government paper as well. So on the net interest income basis, that really helped us as well. But the real story is, apart from the deposits, is in the non-funded income side of it. So we saw very broad-based growth on the cards income, on the trade lines, on transaction banking as well. You know, customers transacting more with us as well. So we see that fees and income going up as well. But all of this transformation, including the investment in the systems and people and everything, happened with a flat cost base. So our cost base was flat year on year, whilst income grew. So that helped contribute towards the bottom line of 614 million PBT.
Quite some good context there, but and that is the point which stood out for me when I was looking at your numbers, because I thought very strong non-funded story. But if you look at the nature of banking, non-funded should be complementary to the funded business. And I was very curious about your posture in the market in terms of risk appetite, and secondly, how you intend to grow your loan book now going forward.
Sure. So, you know, when you come to the loan appetite, right, our target market is what you would traditionally call the SME, or what we call commercial businesses as well. It's not the top end of the corporate market, and it's not the mass market because we don't have the distribution channels for that. So it's the missing middle. And I don't think any other bank dominates that segment, so it's quite open on that. And our differentiating factor is going to be our flexibility and response to customers, our quick decision making. Now, the good thing here is that all the decisions relating to credit are made in the country. So there's a management credit committee which I chair, which meets every Friday. Our board is locally. Decisions are made on a weekly basis as well. So I think our turnaround time and our flexibility, because we understand this market very well, is going to be a differentiating factor. So our target market is actually the commercial side of it, the business side of it, and obviously what I would call the mass affluent on the retail side as well.
And Bhartesh, as we have this conversation, of course, the emerging downside risk that we're now all conversing about is the developments in the Middle East and potential spillovers here. How do you ensure you have a firm hand on your credit risk and especially the NPL book?
So let me start with the NPL book. I mean, the NPL book between 24 and 25 actually went down by 30%. There's a concentrated effort on that, and hopefully over the years we'll see a lot more coming out of that as well. But we're very conscious about what's happening in the Middle East right now, and the biggest impact unknown right now is the impact on fuel prices, which will have obviously an impact on inflation on almost anything. So we're assessing the potential impact on all of our customers right now, with the aim of preempting. And I think this is what COVID taught us as well, right? Let's try and preempt it. Let's not wait for something to blow up. And let's start talking to customers and see how we can help them. Because we actually want to see customers get through this and prosper. So together, we want to see how can we actually help them. Because if you wait too long for this, it's going to blow up. And none of us want that. We actually want our customers to survive and thrive. Because that's our bread and butter.
Okay. Bhartesh, you're putting out some interesting products in the market, and that speaks to the realities we are facing out there, whether it's financial literacy or transactional capabilities. Give us some flavor around the products you're putting out and why particularly the Busara app is significant here.
Sure. So again, the thinking behind it, right? Now, one of the cornerstones of our strategy is to dominate payments, and that has to be digital as well. So one of the things that we did when I joined was we changed our card switch, and we moved away from Visa into MasterCard as well. So there are a number of other banks that have MasterCard in this market, although I'd argue that ours looks a lot better. But one thing that is not arguable is that the digital capability that you have on our app to manage your cards, no other bank in Kenya has that, right? Simple example, you can set and change your PIN. You can change your limits. You can say, I don't want my card to be used overseas on the app. You can stop transactions on the app. You can dispute transactions on the app. No other bank has that digital capability. So when we launch something, we're launching it on a digital first basis on that. Now, coming to Busara, Busara is a product we've been thinking about for a while. One of the problems about any education system, let alone Kenya's education system, is that it doesn't teach our children the value for money and financial discipline. No curriculum has that, literally, right? And especially today's generation, which is being brought up in the digital world, everyone has iPads or TVs with streaming and all of that, it becomes very hard. So this is a product which I said is the first in Kenya, first in Africa, and I think the first in the world, right? Which enables parents to teach kids the value for money and how to manage finances as well. Simple things. You can give your child a task, make up your bed, take the dogs for a walk, do the dishes, etc., and you get a reward for it, whether it's 100 bob or 1,000 bob. They do it, upload a photo of it, and money moves to their account, right? It also teaches them, as an example, the value for planning ahead, as opposed to instant gratification. What do I mean by that? A child can cry today, and you've seen it in many malls or whatever. Here's an iPad or here's an ice cream or chocolate just to shut them up, right? Instant gratification. That doesn't teach them values, right? But here, let's say a child wants something, whether it's a PS5, a new pair of shoes, a new phone, or whatever. It's a goal, and you have tasks the parent assigns to achieve those tasks, and you work towards that goal. Just that process of working towards that goal in itself teaches kids a lot about perseverance as well. And then there's a lot of things on financial education, etc. Then the child obviously has a prepaid card, which they can use, but the parent has full control over it. So they have their own app which they access, which is stylized more towards that age group. If they want to send money by M-Pesa, they can, but the parent has to approve it. So just to make sure that the control is there for the parent to know where the child is spending money in. For example, they can enable or disable the card. They can enable it just for point of sale and not online to make sure they don't go into any funny sites, etc. So the parent has full control on this as well. So the aim is to enable parents to teach their kids the value of money and financial planning as well, which unfortunately our schools don't teach.
And that's a very good point. And I'd imagine when you talk about being able to keep sending away towards a goal, given how yield hungry this market is nowadays, is there an interest-bearing element to it? Just tell us through that.
No, absolutely. I mean, the goal or the savings account for the child is what we call the Pebble savings account. So right now on shillings, it's at 8.5%, which is higher than the T-bill rates, as you know. And on dollars, if you want to save in dollars, it's at 4%. So it's market-leading rates that we have. So it's not a free account from a bank perspective. We're actually paying out. So they're actually saving at a rate better than the treasury bills right now.
Okay. And this, again, is, if I could say, a tributary or a build from the Mfukoni app, which already exists. Tell us about that.
So the Mfukoni app is pretty good. One of the decisions we made is, so it had two problems, if I'm going back 2 years, right? One was functionality, and the two was a look and feel, the UI, UX, right? So we made a conscious decision to focus on functionality, to add a lot more functionality. You know, for example, today an existing customer can open a Platinum Saver account, right? Which again gives you 8.5% on shillings and 4% on dollars. You can make instant transfers, whether it's M-Pesa, Swift transfers, anything literally on that. And the Busara is on the app as well for the parent, and the child gets their own separate app on how to manage their tasks, goals, their card, and all their payments as well. So we're investing on the Mfukoni platform on functionality, and in the second half of this year we'll be investing a lot more on the UI UX as well. That, we believe, will be a primary source of how customers interact with us for transactions. Obviously, for advice and services, we've got our RMs and our branches as well, and that's what we're remodeling towards.
I was going to ask you, Bhartesh, because there is a bit of two-sided view out here. Many Kenyans will tell you we want a digital-first experience, we want to interface with our banking services on our devices. Still, we want to interface with human beings, and that is why you're seeing a few other players now scaling back and also rolling out branches afresh. Where do you stand on that?
So I agree with that view, that you need a mix of the two, right? But you have to be very conscious and deliberate about what do you want branches to be. The branches should not be for transactions. You've got your mobile phone or your laptop for that, right? Branches should be for physical interactions, for advice, right? So if someone wants a mortgage, or if a trader wants to import something from another country and they don't understand what an LC is, they need to come and talk to someone. Or what are your mortgage options if you want to buy a house? That's where it is. Our USP, like I said, is our turnaround time and flexibility, but that's underpinned by our relationship management. When I speak to customers across, one thing that they're really happy with is the service, the relationship management, and that comes from people. And that is something that we're going to guard and build on as well. So coming to branches, I mean, last year in 25, we opened a new branch in Kilifi as well. So we will be opening a few branches, but very selectively. We're not going to go into a massive expansion strategy, opening 30, 40 branches, no. We're very clear on our target market and where we see gaps in our distribution on our target market. So that's where we're going to open more branches this year.
Okay. But as every executive I've spoken to this earnings cycle indicates that payments is a virgin territory where the opportunity is immense. How does SBM then ensure it remains ahead of the curve on this?
I would say two things: convenience and pricing, right? Last year we launched a campaign on Pesa Link, right? Tuma Nambao. So any amount at 20 shillings, right? So as you know, Pesa Link limit is up to 1 million shillings. Now, Pesa Link is instant, real-time, 24/7, right? You can do it on a Sunday evening that you want, and it's bank-to-bank transfer as well. And the whole aim is to get away from cash, right? Like I said, we've put all of our payment channel on our Mfukoni channel, on our app as well. And in the next 3 months, we'll be launching an international payment service, which is online, real-time, 24/7. So you can send money to anywhere in the world, to any bank account, any mobile wallet in the world, at a fraction of the cost of a SWIFT transfer. And I think we'll be the first to do it on digital channels in the market as well. And that's coming in the next few months as well. So payments is one area, and the main reason for that in Kenya is we're still heavily cash dominant. Even if you discount M-Pesa, it is still cash dominant, right? So when you can digitize that, that leads to efficiency, but more importantly, it leads to information which you can help for credit decisioning as well. So that's one of the main reasons for efficiency and decisioning purposes.
Bhartesh, that sounds quite exciting. One, you're banking on the remittances, which of course are a huge flow in this market. But secondly, it looks like you are leaning considerably towards a volume game and less of a pricing game here.
No, absolutely. I'm very clear that the more customers you have within your target segment, at least for us, and the more transactions that they do with you, that's going to be the winning strategy. Look at it simply. As an individual, the bank account from which you make your monthly payments, whether it's to Kenya Power, whether it's to your landlord, etc., essentially becomes your main account, which then means the bank account that you use for payments is your main account. And we want to be the main bank for our chosen customer segment as well. That's why we're investing heavily on payments. And it's not about price, it's about volume. We will continue to compromise on price. That I have no problem doing.
Okay. As we wrap up our conversation, Bhartesh, the operating landscape, this market we are in is undergoing a transition in the risk-based credit pricing models. Of course, Kesonia came to the fore. How is it panning out for SBM?
So like every bank, we've adopted the risk-based pricing model, which is board approved. We've opted to go for the CBR rather than Kesonia, purely because with our target market, it is much easier to explain changes in interest rates with CBR rather than Kesonia, which moves on a daily basis.
Yes, this one is twice a month.
It actually moves on a daily basis.
Once every 2 months. Rather.
Yeah, correct. So it's a lot easier on that. And we think it's the right way with the transparency as well. Obviously, there's a lot of debate going around, and you've seen that in the press around Section 44 and all of that. So that is at the forefront of every bank as well. But from a pricing mechanism point of view, it leads to that transparency for customers, which is great. I mean, I know central banks have been pushing for it, and we agree with that, right? I think customers should have a transparent single source of truth on pricing as well. And I think it's critical. And I think the beauty of the pricing methodologies is that it allows banks that adopt it fully to reduce pricing for customers when their risk rating improves as well. And I think the bank that communicates, and we're certainly going to communicate that, right? That if this is what you need to do to improve your risk rating, and when your risk rating moves, your price will move down by X. And I think that's the transparency this market needs as well, to enable Wananchi to plan ahead as well.
A lot of talk in the industry around digital capabilities and what AI means, especially on a frontier like credit scoring, for example. What are some of the use cases which you're already deploying here?
So, at a basic level, it is, do you have the right data? Can you trust that data? And can you develop models on that data to automate repetitive tasks, right? If you take consumer banking, it's very simple. The way a loan is assessed hasn't changed in 300 years. Do you know the person? Do you know their character? What's their disposable income? Can they actually afford the repayment of the loan, right? It's a pretty standard template as opposed to a corporate where each corporate differs from each other, right? That can be automated as long as you have the right data sets on this. So we've already deployed our AI models onto internal customers. So we're offering them shorter term loans, sort of payday advance loans, based on AI models that we've built on that as well. As our data gets deeper and richer, we will extend that out. So the use cases are a lot. But apart from credit scoring, AI can be used for risk management as well. When you're looking at patterns, transaction patterns which are outside the norm. AI can be used for that. AI can also be used to automate back office operational tasks as well. a lot more. So we're looking into the whole spectrum right now. So we're at different stages in all of those aspects that I've mentioned right now.
Okay. Bhartesh, let's close this conversation with the focus on we are undergoing a recapitalization in the industry. The central bank, of course, last year, that is FY25, was the first major hurdle. How does SBM sit within this context and the build up to the target of 10 billion?
Sure. So the target, as we speak, is about 3 billion,
Yeah.
and we're already at 8 billion, and we're very comfortable that we will meet that through internally generated retained earnings well before the deadline of 10 billion. We'll exceed that well before the deadline as well.
All right.
Very confident.
Give us your parting shot now on the products and speak to it within the context of the banks are increasingly talking about being fit for purpose and banks of the future with a younger demographic. How do their products then speak to that need?
I'll just say two things, right? When you look at our app, right, as a customer, you will not need to call the bank or come into the branch for any service-related issues, unless, of course, you want some advice. Anything and everything related to the cards can be done on the app. And especially for our customers or potential customers with children in the age bracket, I would say 6 to 17, if you're looking to instill the value for money and financial education for children, which our schools don't offer, what we have in Busara more than helps with that. And we're going to continue adding on to that. And it's all digital, it's friendly, and with market-leading rates at 8.5% on shillings.
We've been having a conversation with Bhartesh Shah, the Chief Executive Officer of SBM Bank Kenya, focusing on the F25 numbers and the turnaround of the business, the macro landscape and emerging risks, especially given what's happening in the Middle East, coming to the product development within the bank and especially Busara app and what that means for financial literacy and how you can unlock that value for you and your loved ones, and finally focusing on the recapitalization of the banking industry and how SBM is placed within this context. Certainly, he indicates that there is comfort that they will meet the 10 billion target, generating through retained earnings internally, and therefore no pressure on that front. We shall keep on highlighting these issues as and when they emerge. Stay tuned.